Hi everyone, I'm Ken from Crypto Trading KS. If you're new, a very warm welcome and welcome back KS family. My goal is to help you to be more of a financial and emotional blessing to yourself and those you love. Having been inside financial markets for nearly 40 years, I'm going to share all the hard knocks that I've encountered during that time. I'm going to tell you what is actually important and what is just nonsense and fluff, and there is a lot of nonsense out there. If you really want to make money inside financial markets, I can help you to do it, but you have to face some hard truths. Also, you'll need to learn how to think differently, and I'll help you with both. I'll help you to get the life that you've always dreamt that you know that you could have. Let's run the numbers. Stronger than anticipated retail sales month-on-month, year-on-year, and ex-autos month-on-month, combined with stronger than expected industrial production month-on-month and year-on-year as well, has increased the probability from 5.2% yesterday to 10% right now, of a 25 basis point increase in the federal funds rate. To fight inflationary pressure, the main markets didn't respond to this well, as both the DXY and the yield spiked up. Overall, in the main markets, all sectors were down negative 0.01%. Materials did the best, information technology did the worst. Back on October the 3rd, the markets were experiencing extreme fear. We've seen a bit of a recovery in fear from that point, but it's always a rocky road. There's always one step forward, one step back, and then eventually 2 steps forward and 1 step back. Price is always moving in waves between total market structure levels. Looking at total market structure for the Tier 1 charts is vitally important, and we're going to go through that in today's video. Total market structure is assessed by a standardized process through the CTKS method. You'll note that there's 3 structural levels on this chart, which is the S&P 500. With normal support and resistance lines, all resistance lines and all support lines have the same strength. This is not true with the CTKS method. Different lines have different strengths. For example, just right now, we're marginally above a structural smart money support line at 43.72. Without the CTKS method, you cannot tell where these structural lines are. For example, using recent indicative price, we would just say, oh, there's a structural support here at 43.68. The problem with that is that the S&P originally started trading in 1871. We are therefore making an assertion that 1 day, 4 hours and 30 minutes trumps all the thousands and thousands of days since 1871. Clearly that doesn't make sense. What about this level up here at 44.03? This is a structural resistance level, but how did we draw that? And what about this support down here at 43.56? Where did that come from? You could go through the ctksmethod.org standard certification process doing level 1 certification and level 2. Or if you just want to get the answer straight away, you just throw on the monthly indicator, and this is how we get these structures. You can see a number of different things occurring. This 43.72 structural support level is quite strong. It's much stronger than this weaker structural support area down here and down here at 43.56. You can see there's an aggregation of structural resistance levels up at 44.03. These are the true support and resistance levels of the S&P 500. I'd like to explain this total market structure level to you a little bit differently. Say you needed to conduct a survey, and the survey results were literally life and death. You're going to put your money on the survey results. Just think about, you have to survey 55,776 people and just obtain their understanding of a specific brand. But instead of doing that, you just do one. Do you think that your results from that one person would be indicative or representative of those 55,776 people? The answer is incredibly no. When I was lecturing first and second year statistics, we always did sampling studies. Samples and populations are very, very important to understand. Here, if we look at this recent indicative price, which is literally a day's worth of price action, we cannot say that these levels are meaningful in any way, shape or form to the S&P 500. Even if you draw a level in and you say, oh, this is resistance, don't forget, this is just the past day. This is support, and perhaps that's support. They're not meaningful at all. It's like going out and asking 55,776 people what they think of something specific. Instead of doing that, you just say, oh no, that's too hard. I'll just ask one person. There's a little bit more to this methodology as well. The CTKS method has different levels of structural resistance and structural support. You can see the lines are all a little bit different. You can also see when they accumulate or structure together, that forms a stronger line. When they're thicker, that forms a stronger line as well. Smart money is not lazy. They go out and they need to know because they're putting millions and millions of dollars on the line. The next time somebody just says, oh, this is the most important resistance, just think about the time frame involved. If they're on log or not log, that is very statistically significant as well. And of course, when the chart started trading. Looking at this analysis, if the S&P 500 manages to take this 43.72 and convert it into support, the next stop is 44.03. If it fails to hold this 43.72, the next stop is 43.56. We cannot just look at one chart and say where the chart is going. It doesn't work that way. To know where price is going, we must at an absolute minimum look at the Tier 1 structural levels. These are the charts that are the engine of financial markets globally. We've looked at the S&P 500, but what is the NASDAQ doing? What about the DXY? What is Bitcoin and gold doing? US oil, junk bonds, the US 10-year yield, and total crypto market cap. The Tier 1s measure the engine of risk globally. When people draw normal support and resistance lines, that is retail support and resistance lines, they don't know the strength of those lines. They don't know where the safety nets and where the ceilings are. This is incredibly dangerous to financial health. For example, when we look at the NASDAQ, and the NASDAQ started trading in 1973. In fact, it started trading 18,371 days ago. If we were to try to get support and resistance levels from 5 days worth of data, 5 days on 18,371 is literally such a tiny percentage. It's only 0.03%. It's almost 0%. What does this actually mean? If you just look at this particular price action and you just mark up something in here and say, ooh, this is the most important resistance, keep your eye on that resistance. Or what about this? This is the most important resistance. Or is it this is the most, oh, what about support? Is that support? Oh, no, maybe that's support. Oh, it could be there, it could be there. Don't forget, it's 0.03%. It's not even 1%. Whatever support and resistance lines are drawn from recent indicative price, and this is just 5 days, they're absolutely and utterly meaningless. The other thing to understand, when resistance lines accumulate, they become stronger. If you get too many resistance lines accumulating, it will stop price dead in its tracks. If you have huge structural support beneath price, that can act as a literal launch pad, and it can just pole vault price into the stratosphere. This is why it's so important to know where all the structure is inside a specific chart. To draw up these structural lines, we need to go through level 1 and level 2 standard certification, or alternately you can just pop on the indicator. Let's have a look at the NASDAQ and we'll just pop on the indicator. We can see some structural levels here. The interaction with price tells us so many different things. We can see that the NASDAQ tried to come up and challenge this 13,623 level, but it failed, and it had to come down to this lower safety net at 13,407 and gather momentum. It came up again and tried to challenge this 13,509. and just came back to support. You can imagine, if you know where the support is, if you know where the safety nets are and where the ceilings are, you're ahead already of 95% of people inside financial markets because you're not guessing. You're following a standards-based process. One thing that we know, the S&P 500 is just starting to get over structural resistance and turn it to structural support. That should give momentum to an up case in the NASDAQ. So we should at least head to this 13,599 level. Masterclass students, you can realize that this has done a cut over. So that's another stack probability for the upside. If the bulls take control, we could even head through this 13,623 structural resistance level. If the bears take control, they'll seek to push it down to the 13,407 level. You can see here with the NASDAQ, we're not guessing. We know where the levels are. It just creates such a stress-free environment. A lot of people just trade one market. For example, they might trade commodities, gold, silver, or they might trade crypto, Bitcoin and the alts, or they might trade Forex, the DXY and the associated pairs, euro, dollar, etc. Or they might trade stocks and indices. The key is, how do these tier 1 interact with each other? We've looked at this structural level on the S&P 500 and the NASDAQ. Let's have a look at Bitcoin and total crypto market cap. Now, why would we look at these? If we look at the S&P 500 and the NASDAQ, we're looking at the stock market, not the S&P 500 and the NASDAQ. We're looking at things like Tesla, Microsoft. We're seeking to determine, are they at support or are they at resistance? Let's look at the association between S&P 500, NASDAQ, and Bitcoin and total. Please let me know in the comments, do you see any relationship between the S&P 500 futures, which is the candlestick pattern in the background, Bitcoin, which is this gold line, total crypto market cap, which is the white line, and what's the purple line? That's the inverted DXY. You see that we're covering so many markets all in one. This is exactly why we look through the tier 1 charts. This is called stacking of probabilities. Every professional does this, and it's easy to do when you know how. I'd just like to hone in on one thing before we look at crypto. What you can see here is the DXY. The DXY started this particular chart in 1967. What is this gold line here? That's Bitcoin, or in fact, the inverted Bitcoin price chart. You can see as the DXY goes up, the inverted Bitcoin chart goes up as well. That means Bitcoin goes down. Sometimes it's hard to understand inverted relationships. I hope this helps just a little bit more. I've uninverted Bitcoin for you in this chart. One thing just to keep in mind, when we get external shocks to market conditions, these particular relationships can go out of phase with each other. Just something to bear in mind. The DXY chart we're looking at right here has approximately 20,714 days worth of data. What if we were to look into this window, which is approximately 9 hours 30 minutes? It's not even a percentage, it's literally a rounding error. So if we want to know where the structure is, we need to pop on the indicator. So let's do that now. We could, of course, mark up the charts ourselves with the CTKS Level 1 and Level 2 standard certification. But if you want the quick result, you can just add the indicator like this and just pop it on. You can see two structural levels, one resistance and one support. You can see that this 106.13.13 is really light support, and you can see this 106.24.32, it's much stronger resistance. Turning to Bitcoin, it's important to stack probabilities because Bitcoin feels it first. If you see Bitcoin come down, it's quite likely that the stock market will follow. A lot of people don't understand the very strong interplay between the stock market and crypto, but it's just risk. And crypto is really risky. That's why it has such incredible returns. When we look at CTKS structure, we mark up all of price history because we want to know what the institutions know, what the algorithms know, and what smart money knows. That means it's approximately 5,096 days, well, 97. The indicator does take some getting used to, so instead of turning it on, I'm going to give you the shortened version. When we look at Bitcoin's price action, there is just a barrage of smart money resistance between 28,581 and 29,322. That's why, even though we came up so strongly, it was rejected. A lot of people said, oh, it was rejected because there was a false rumor. Well, that's absolutely part of it, absolutely, but the concept is we would have been rejected anyway because CTKS structure overrides. This structure is real. This is literally where smart money and the algorithms are buying and selling. And you can see that Bitcoin's price has been very, very resilient. If it was just rumors and not the movement of the S&P 500 and the NASDAQ, we would have a different chart playing out right now. This is exactly why we stack probabilities. And what is it looking like Bitcoin is trying to do? There's one structural support level at 28,426, and we can see Bitcoin's price is seeking to get through this area of smart money resistance. If it does, it could be pretty much hard going. But Bitcoin is a really hard worker. When we think about structural support levels, there's one at 27,821 and a lower one at 27,288. If it's not coming up, it's going down. If it can't break through this 28,581, it's coming down to 27,821. There's so much certainty when you apply the CTKS method because it's been formed by a standards-based process. Not only that, it's the world's most sophisticated and powerful smart money buy and sell level detection system. You can learn it once and apply it for a lifetime to any chart. It's powerful to look at the S&P 500 futures and overlay total crypto market cap and Bitcoin to determine a likely or possible scenario for future price action given the structural interactions. You can see already that things are not looking too bad. We've had a crossover in resistance, actually multiple crossovers. It looks like the S&P 500 futures is going to go for it. It's early days yet, but it's a very positive sign. I'm so grateful and appreciative for all your magnificent comments in yesterday's video. We literally have the most amazing community. Kate and I are so appreciative and grateful for each and every one of you. Sharing this time together is just awesome. The difference between our channel and other channels. I seek to share my experience gained almost across 40 years of experience inside financial markets, and to do so in such a way that it really helps you out. Financial markets are so very tough. I don't want to make it any tougher for you. I want to try to curb your losses and just speed and accelerate your learning curve. Thank you again for everybody who commented and watched. There's so many amazing comments, I just wish I had time to read them all out. And if you like gaining an edge inside financial markets and you're new, a very warm welcome, and please subscribe. Our community covers the financial markets in a way nobody else does. The CTKS method is the world's most powerful method for detecting smart money buy and sell levels. It's a standards-based process over 2 levels of certification inside either ctksmethod.org, or you can find a deeper dive at cryptotechnicalanalysis.org inside the CTKS Masterclass. If you found the content useful, please smash that like button and subscribe. And if you have any questions for me, please pop them in the comments. If there's future topics that you would like me to cover, just let me know in the comments. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.